Now, when it comes to housing YouTube, one of my biggest pet peeves is that everybody gets on here and talks about crash, 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 crash. And the reason why they do that is because it generates a lots of views. My biggest issue with these people, aside from the fact that most of them don't actually sell houses and most of them are just glorified journalists, if you will, reading articles and just giving you their own opinion about what they think is going to happen. My biggest issue with it is that nobody or hardly anybody is actually providing a real solution to their viewers on when they should buy or sell their next home. Not giving opinion, but actual insights based on the data. And that's what I'm going to do for you today. Because it's easy to say everything's gonna burn and don't do something. But you know where the real professionals lie? Like myself, well, not lie, but like where our position is or where our weight and gold is, actually helping people know when to actually do something so they can capitalize for themselves and their family. And the truth is that nobody can time the top of the market, although I said the top of the market was March of 2022, and nobody can really time the bottom of the market. And I wasn't selling real estate way back in 2010. I was actually still in college, but nobody can time the top or the bottom of the market. If they're telling you that they can with 100% accuracy, that's not true. But what we can do is use the data. And by using several data points, we can find a really good entry for you to buy your next home or sell your next home. And also looking forward, we can let you know when would possibly be a good time to capitalize on your investment if you're one of those people like myself who wants to buy their next house and then make an extra couple $100,000 like I did when we bought our home during COVID. Now, I actually want to make my videos a lot shorter so more people watch. So go ahead, like the video, share it, subscribe, and let's jump into it. Now, to understand when is a good time to be able to buy your next home, especially given the climate, the first thing I want you to understand is the number one reason why people aren't buying homes right now is because they're simply unaffordable. Housing affordability is at probably a multi-decade low. And if you're sitting on the sidelines trying to figure out when you should jump in, it is my professional opinion that you should go ahead, jump in, and make your next real estate move when housing is becoming more affordable. But how do we know that using the data? I'm getting ready to show you. Now, if you're unfamiliar with TradingView, it is a free platform, although they do have some paid programs. I'll leave my link in the description. So of course, I can get a little something for introducing it to you. But it is a free platform that you can use to not only track stocks, crypto, and precious metals, but you can also track economic indicators or economic data. And what we're looking at today is the Housing Affordability Index created by the National Association of Realtors. This index literally shows you when it is an affordable time to buy versus when it isn't an affordable time to buy. And let's talk about when I would buy using this chart. So if you see this darker blue line, although it doesn't go back, 20 years, it does go back almost 4 years, back to June of 2020. And you can see that the lower the index gets, that's the more unaffordable housing is getting, all right? As you can see in the index, from the time the index started, housing affordability has dropped about 50%, which is crazy. Now, the number one tip that I have for you is, like I said before, you want to re-enter the real estate market when it becomes more affordable. Now, how can you tell, based on using a chart like this, that housing is becoming more affordable? Well, you're going to look for this index to start another uptrend. And currently, the simplest way to do it is by this 20-period moving average. As soon as this royal blue line, which is the housing affordability index, crosses above this lighter blue line, which is a 20-period EMA or moving average, then you can consider housing affordability to be going back up or in an uptrend, which means that houses are going to continue to become more affordable. And it is my professional opinion that using this chart, only then should you re-enter the housing market. Now, the logic behind that is actually quite simple. If houses are unaffordable, then why would you buy? You will obviously want to buy when houses are getting more affordable, but you don't want to wait until they're too affordable, because along that whole journey from it becoming unaffordable to affordable, and housing prices are actually going to be going up. So if you want to catch the bottom of the market just by using this chart, re-enter the market when housing affordability starts its uptrend. One easy way to do it is just by looking at that moving average. As soon as it crosses, get back into the market. And until it does, I'm staying out. Now, the second reason why it isn't a good time to buy for most people, despite what your buddy real estate agent might say, or despite what, the mortgage loan officers might say, is because of the rates are so incredibly high right now. We all know the story. Rates were like 2.5% or almost 2.5% during COVID, and now they're at or above 8. It just depends on when you're watching this video. So how do you know when is a good time to buy a home and actually get a good rate? Well, let's go right back to TradingView and I'll show you exactly how to do that. Now that we jump back into TradingView, we're looking at the 30-year fixed rate mortgage average in the United States, all right? But more importantly, we're going to be using something which is called the Relative Strength Index to be able to find out when is a good time to re-enter the real estate market. Remember, high rates affect buyers and sellers in this market. So if you're a seller, maybe wait until the Relative Strength Index gets to a certain point could benefit you as a seller as well, because obviously in order to sell a product or to sell a home, in this case, you're going to need people to be able to afford it, especially at the price that you want. But if you're a buyer, of course, you want to get the lowest rate possible as well. And we're going to talk about how to use the Relative Strength Index to be able to do that. So without going in depth about the Relative Strength Index and exactly how it's calculated, there's just one simple thing I want you to know, that over 70 on the Relative Strength Index means that an equity is considered overbought, which means that too many people have purchase that equity and it's overvalued, meaning that there could be a reversal soon. But just for this scenario, I want you to think that if it's high, then you probably want to stay away because it's not a good time to buy. And a reading under 30 on the Relative Strength Index means that that equity, or in this case, the mortgage rate, is actually really cheap, cheaper than it normally is. And it's a good time to get in because you can get an extremely low rate. And we know that low rates equal lower payments, much more affordable for you to buy. And that's a good thing if you're buying. So we're just going to take a look at some of the historical data so you can see the last time it was oversold, and just imagine if you had bought at that time and if you decided to sell, or even if you're just in your home and you have that low rate from the last time it was there. So looking at the chart, the last time that the Relative Strength Index was under 30 and leaving from under 30, meaning that it was no longer oversold or no longer super cheap or undervalued, was January 1st, 2021. And at that time, the 30-year fixed rate on average was about 2.97%. And as you can see, when it left the oversold area, rates were about 2.97. And when it entered the overbought area, rates had gotten all the way up to 4.67, which is a huge difference from where it was before. Mortgages had already gotten a lot more expensive. And as it stayed in that overbought area, the mortgage rate just continued to go up. And if you bought up here, you have a super high rate. And personally, I'm going to wait until it goes back oversold until I buy again, because I know the rates are going to be low. And if I decide to just hold until it goes overbought again, I'll probably make an extra couple $100,000, and you would too. And just to give you a little bit more context to the point that I'm trying to make here, is I've added the orange line here, which is the Case Shiller Home Price Index, which is pretty much an index of the home prices or resale homes in the United States. But as you can see, since December of 2020, when rates were low, the home price index was also a lot lower. And as rates went up here, then that's where you saw the peak in the Case Shiller Home Price Index, as rates were also high. Because we know that low rates lead to home price gains, and high rates actually leads to home prices stalling or just going down altogether. So ultimately, the choice is yours. You can continue to believe all the people that are having like crash talk across YouTube and they don't provide any solutions. But in this video, I just gave you two really quick and easy ways, and of course, free ways that you can use to gauge when you should get into the market by using the Housing Affordability Index or using mortgage rates and the Relative Strength Index to make sure that the next time you purchase a home, you get it at the best price and at the lowest rate. Be sure to comment below what you think about my analysis here. Share this video. Let me know, do you think I'm wrong? I'll be glad to debate you in the comments or anything like that. But honestly, I appreciate everybody's support. And if you could, please go ahead, subscribe to this channel. Our next goal is 2,000 subscribers. We were able to hit 1,000 subscribers with all of your help. So go ahead, subscribe, and I promise you, I'll continue to bring you more great content just like this. This is a Trusted Realtor. Deal closed. Peace.